In this particular video segment, we're going to discuss at length the purpose, accounting, and financial reporting for commonly used custodial funds. Keep in mind that with these custodial funds, we are going to be using an accrual basis of accounting. With these custodial funds, basically what we have going on is that the government oversees but does not have administrative or financial involvement with the assets of the custodial fund. So they have oversight, but no involvement in decision making on how the money is to be used or how it's supposed to be distributed. Nor does the government have any ability whatsoever to place government assets along with the funds in custody. So basically, it's just a custodial relationship. We can account for this within a governmental or within a proprietary fund, these types of activities, unless the custodial fund usage has been mandated by law, by some GASB standard that applies to the particular type of funds in custody, or by the direction of a governing body. So how can you make that make sense? If we are talking about, for example, the government has custody of withdrawals or withholdings from employees' paychecks, and they have pulled out on behalf of another entity, the U.S. federal government, Social Security and Medicare portions attributed to the employees portion. Okay, so it's not the government's money, the state or local government's money that's being held. It's being held to be sent on to the federal government. What about state income taxes withheld from an employee's check? That's basically sitting out there as a liability, a payable account, until the funds are sent on to the particular state that they're holding it for. All right, so we can account for those types of withholdings and that payable until it's sent on in our governmental fund, in the general fund, or maybe in a proprietary fund like an enterprise fund, a utility, for example. But if we have got some other relationships going on, then we may determine that a custodial fund is necessary. All right, so governments will use a custodial fund, which is a fiduciary fund, which is not included within the government-wide statement of activities or statement of net position. It's funds not related to the government. They are somebody else's funds. So the government will use a custodial fund. They can use them to account for special assessment debt processing. Recall what we said about special assessment debt quite some time ago now, that with a special assessment, what's happening is some type of project or construction that's taking place. The government's doing, for example, the work or oversight of the work, but the property owners benefiting from the special assessment are going to be paying for it, either in part or in whole. Well, if it's one of these where the special assessment group of owners is going to be paying for it in whole, and special assessment debt was issued in order to pay for the project, and the special assessment property owners are to pay back that debt over time, and the government is in no way, shape, or form on the hook or backing up the payment of that debt for those special assessment property owners, and the government is only providing the billing and collections of the special assessment property owners' assessments to then forward that money on to pay for the principal and the interest of the special assessment debt, then the government would use a custodial fund to do all of that. All right, so it's when the government is not obligated to pay the debt, they're only basically being the middleman there, sending out the bills for the assessments, collecting the payments from the property owners, and then sending the funds on to pay off the debt that was issued for the funding of the special assessment project. That's one time that a custodial fund can be utilized. Another one, which is a very predominant use of custodial funds, is when it's a tax custodial fund. And basically, a tax custodial fund is when the government is collecting taxes or some other type of revenue for several funds. And possibly for other governments too. So for several funds that it operates, and even for other governments. And they are collecting those taxes or revenues in. They've got custody of them, and then they're going to forward them on to the other funds, to the other governments, as required based on the type of taxes or revenues that is coming in. So think about it. Tennessee Department of Revenue, commonly referred to as TDR, they have all of the sales and use tax collected by every single business within the state of Tennessee, and even those who operate outside that have to comply. And those sales tax dollars are all sent in with a form by those businesses to the Nashville office of the Tennessee Department of Revenue. They've got to have a process for accounting for those receipts and then sending them out as per state law, who all gets a portion of those sales tax revenues. Same kind of thing happens with gasoline taxes. All right, so they've got to be collected and then somehow apportioned and distributed as per what those intended uses were for those funds. So we can use a custodial fund for that purpose. What about a county or a city where we've got property taxes, and those property taxes have basically been earmarked to pay for certain things going on in funds? Well, we're going to keep up with the collections of those property taxes, and then we're going to account for the distribution of those to the different funds and governments as required. So think about it. This could be very complicated and cumbersome, very detail-oriented. Tax custodial fund administration is complicated. It's affected by such things as the tax rates changing from one year to the next, the property value assessments changing. What about people paying late? The penalties, the interest, what amounts have come in that are applicable to the current period, what amounts have been received that need to be applied to later periods or prior periods. I mean, seriously, even people are attempting to pay their property taxes in advance. We had quite a bit of that going on this year due to how the federal tax laws have changed and things that are and are not deductible for those who itemize. All right, so it can get very cumbersome. Basically, what is needing to happen at a custodial fund is they've got to, record those receipts and then also at the same time show the liabilities to where those funds are going to be dispersed or distributed. So this is done at a very high level, recording those receipts and those liabilities. And then we're going to get very detailed as the money comes in, those collections, what year is it being applied to, and then what funds or other governments are supposed to get and how much they're supposed to get. Now think about how much time and energy and of course pay and benefits of the people who are working within a custodial fund department are costing our regular general government. Okay, it's their payroll and all that other fun stuff is attached to it. The expenses for the office they work in. Therefore, these custodial funds do typically have a charge that they charge these other governments and funds, or even withhold it from the amount that they disperse. And think about it. The general fund needs to be reimbursed. They need to be reimbursed for their expenditures and expenses that they have incurred in order to facilitate this custodial relationship. When we think about these fiduciary funds, in particular the custodial funds, within a period, what we may actually see is that all the amounts that have come in, we're referring to them as additions. If they have then been dispersed or distributed, then our additions would equal our deductions within the period. And that means that if they were equal, then there would not be a fund net position for the custodial fund. Because again, these funds, these custodial funds, these fiduciary funds are going to be their own set of financial statements. If the additions were greater than the deductions for the period, then at the end there would be a net position because we haven't actually distributed out all the amounts that came in. Again, the general government is going to need to be reimbursed for the amounts that they've expended. So maybe the general government is going to show that receipt for those charges or fees that are being either charged to and received or withheld from the other funds or governments that are receiving these custodial funds. Another important area of custodial funds that comes up regarding governments is what is referred to as pass-through custodial funds. Now, when this happens, what is actually going on? Think of what the words pass-through mean. The government is serving as a conduit only. The cash is coming in, and then the cash is going out. The government is the first or primary recipient of the funds, but then forwards them on to whoever the intended parties are. So government may serve as a pass-through entity, for example, when they are receiving grants in that have to be then distributed onto others directly, or some type of entitlement, or some type of shared revenue. Again, all of these are expected to go to other parties. This happens a lot with the federal government sending it on to the state governments, and then the state government's got to send it on elsewhere. Or the state government's sending amounts on to local. All right, so basically, we need to make sure that the fund assets are being distributed on to the correct parties. Now, we have some criteria. If the government has administrative involvement, if they monitor the subrecipients for some type of compliance with requirements of the grant, or if they determine the expenditures of the subrecipients are meeting the eligibility requirements for receiving the funds, or if the government has discretion over the allocation of how the grant can be used, then the government has what's called administrative involvement. And in that case, they're not to use custodial funds. They don't have to, okay? They don't have to. Also, if the government has direct financial involvement, if they have direct financial involvement, meaning that the government is required to match the grant funds, for example, then they don't have to use custodial funds. But if either of those two, with those little items as examples, are not met, they don't have administrative involvement, and they don't have direct financial involvement, then it's a fiduciary type of relationship, and therefore they must use a custodial fund. If it wasn't fiduciary completely, like I just mentioned, then they could use a general fund, or they could use a private purpose trust fund, or they could even use one of those proprietary funds to keep up with it. But if it is custodial only in nature, only fiduciary, only serving as a pass-through, then we have to use a custodial fund. All right, so use of custodial funds can even be required for investment pools. And we'll talk about investment pools later, but it's basically where a bunch of entities pool money together and have somebody management for investment purposes. So even if we have an investment pool, we could use a custodial fund for that if there's no trust agreement, and we would keep up with it for those external participants. Lastly, in regards to our custodial funds, is the financial statement reporting. You will see that there's a statement of changes in fiduciary net position that has to be prepared. And again, these are for only fiduciary funds. These are not any funds of the government-wide level. None of our governmental funds, none of our business type funds. This statement is separate from the government-wide stuff. GASB requires that we identify and report on these statements for the funds, for the fiduciary funds, any additions and deductions to the net position. So, for example, what's an example of an addition? Let's say we're looking at the special assessment debt example that we talked about a little bit ago. If we have those special assessment property owners sending in their payments, then we would show it as an addition. Principal and interest collections. That's us showing the payments were received as an addition from those property owners. And then when we turn around and pay out on their behalf, basically, the interest and the principal to the bondholders of that special assessment debt, then we would show it as a deduction. In regards to how we can aggregate information, custodial funds are allowed to be aggregated. So the additions and the deductions to the net position can be aggregated by area or by type, rather than breaking it down and showing all the details and all the pluses and minuses for each fund that was represented or each government that was represented. We can keep the information at a higher level with these deductions and additions. Lastly, all custodial funds will be aggregated and reported in a single column. No disclosures are required by GASB regarding these. However, a government may opt to include within that CAFR report detailed info. And they could put together another one of those combining statements. And the combining statement would show the net position and the changes in net position of these custodial funds, showing each custodial fund in its own column. All right, so we can opt to show that information. And again, transparency is always a good thing when it comes down to accounting.